Hello, everyone. Welcome to the market opening bell on Monday, March 17. The State Council Information Office of China will hold a press conference at 3 p.m. today to discuss efforts to boost consumption. Previously, the National Financial Regulatory Administration proposed developing consumer finance to support consumption revitalization, emphasizing the need to increase the supply of consumer finance, optimize its management, provide relief through personal consumer loans, and improve the consumer finance environment. The market is optimistic about the potential introduction of national policies to stimulate consumption, which led to a significant rebound in Hong Kong stocks last Friday after 5 consecutive days of decline, a cumulative drop of 907 points or 3.7%. The Hang Seng Index peaked at 24,113 but failed to hold above 24,000, closing up 497 points or 2.1% at 23,959. The X-share index rose 237 points or 2.7% to 8,877, while the Hang Seng Tech Index gained 133 points or 2.3%, closing at 5,880. The total market turnover for the day was 290.6 billion Hong Kong dollars. However, the three major indexes have not fully recovered from the losses of the previous 5 days. For the week, the Hang Seng Index fell 271 points or 1.1%. The X-share index dropped 36 points or 0.4%, and the Hang Seng Tech Index declined 156 points or 2.6%. Mainland Chinese markets also surged last Friday, with the Shanghai Composite Index closing at 3,419, up 1.81%, and the Shenzhen Component Index closing at 10,978, up 2.26%. The combined turnover of the two markets reached 1.84 trillion yuan, an increase of 192.5 billion yuan from the previous trading day. An expanded meeting of the Party Committee of the People's Bank of China indicated that this year, based on domestic and international economic and financial conditions and market operations, it could choose an opportune time to lower reserve requirements and interest rates, providing support to the stock market. On the economic data front, new renminbi loans in the first 2 months of the year totaled 1.01 total 6.14 trillion yuan, below the market expectation of 6.38 million yuan. For February alone, new renminbi loans were 1.01 trillion yuan, falling short of the anticipated 1.28 trillion yuan. Over the first 2 months, the cumulative increase in social financing scale was 9.29 trillion yuan. In February, the social financing scale increment was 2.23 trillion yuan, below the expected 2.5 trillion yuan. As for money supply, broad money M2 grew 7% year on year, in line with expectations, while narrow money M1 increased by just 0.1% year on year. In the Hong Kong stock market, Hot in Inner Mongolia announced childcare subsidies, offering 100,000 yuan for a third child, boosting childcare related stocks. Feihe surged 15.7%, Mengniu rose 9%, Jingxin Fertility soared 41.7%. Good Baby International climbed 25.5%. According to China's seventh national census in 2020, the mainland's birth population was only 12 million, the lowest since 1960, with population aging intensifying. This backdrop gave rise to the three-child policy. It took 32 years for the two-child policy to replace the one-child policy, but only 5 years for the three-child policy to succeed the two-child policy. In 2024, China's annual births totaled 9.54 million, a slight increase from 9.02 million in 2023. However, with 10.93 million deaths in 2024, the total population declined for the third consecutive year. It appears the three-child policy has not effectively boosted birth rates, necessitating subsidies. Hohort recently released implementation details for its childcare subsidy program, offering a one-time payment of 10,000 yuan for the first child, 50,000 yuan for the second, and 100,000 yuan for the third or more to eligible families. Reports indicate that the National Health Commission is working with relevant departments to study childcare subsidy plans and accelerate the implementation of fertility support policies. Earnings reminders: WuXi Biologics, China Tower, Moore International, and Kingdee International will release the results today. U.S. stocks rebounded sharply last Friday after Senate Minority Leader and New York Democrat Chuck Schumer stated he would not block a government funding bill proposed by Republicans, averting a federal government shutdown. Additionally, the University of Michigan's preliminary U.S. Consumer Confidence Index for March came in at 57.9, well below the expected 63.1, fueling expectations of Federal Reserve rate cuts this year, turning bad news into a positive for the market. For Dow Jones Industrial Average closed up 674 points or 1.65% at 41,488. The S&P 500 rose 117 points or 2.1 points to or 2.1% to 5,638, and the Nasdaq gained 451 points or 2.6% to 17,754. For the week, the Dow fell 3.1%, marking two consecutive weeks of declines. The S&P 500 and Nasdaq each dropped over 2%, extending the losing streaks to 4 weeks. The Nasdaq Golden Dragon Index, reflecting Chinese concept stocks, rebounded 2.69%. Hong Kong ADR suggested the HSI will open 385 points higher on Monday at 24,346. In the bond market, investors are waiting this week's Federal Reserve policy meeting, with U.S. Treasury yields rising slightly. For 2-year Treasury yield was 4.015% and up 1.5 basis points for the week. For 10-year yield was 4.307%, unchanged for the week. And the 30-year yield was 4.614%, also flat for the week. Amid financial market volatility, investors are turning to safe haven assets. Gold closed at a record high of $3,001.1 US dollar per ounce on Friday, up 13.6% year to date. This week, there are 4 key focal points. First, the Federal Open Market Committee meeting on March 18 and 19, where attention will be on Chair Jerome Powell's views on the economy, employment, inflation, interest rates, and tariffs, as well as changes in the dot plot. Second, U.S. economic data, including February retail sales, industrial production, building permits, housing starts, and import-export prices, will be released this week. Third, corporate earnings from companies like Micron, FedEx, and Nike. Fourth, NVIDIA's GTC conference held from March 17 to 21, where CEO Jensen Huang's keynote will focus on AI agents, robotics, and the future of accelerated computing, with the first ever Quantum Day addressing the current state and future of quantum computing. Our stock pick today is Kelun-Biotech, stock code 6990. Kelun-Biotech is primarily engaged in the pharmaceutical business, focusing on the research, development, manufacturing, and commercialization of innovative drugs in oncology, immunology, and other therapeutic areas. The group is one of the pioneers in developing antibody drug conjugates, with over a decade of experience in ADC development. Is among the first in China and one of the few globally to establish an in-house ADC development platform, OptiDC. The group has entered into 3 licensing and collaboration agreements with Merck to develop multiple ADC assets for cancer treatment, making it the first Chinese company to license an internally discovered and developed ADC candidate to one of the top 10 multinational biopharmaceutical companies. Its end-to-end manufacturing capabilities, compliant with current good manufacturing practices, and a comprehensive quality control system, further support its drug development efforts. Additionally, leveraging decades of experience, industry relationships, and the extensive network of its controlling shareholder, Kelun-Pharma. The group is well positioned to expand its commercialization infrastructure and market channels. The group's pipeline targets prevalent or hard to treat cancers worldwide, such as breast cancer, non small cell lung cancer, and gastrointestinal cancers, including gastric and colorectal cancer, as well as non oncological diseases and conditions with large patient populations and unmet medical needs. Is currently developing over 30 candidate drugs, primarily consisting of oncology candidates and candidates for non oncological diseases and conditions, such as autoimmune, metabolic, and other disease categories, with more than 10 in clinical stages. Recommended buy price 245 Hong Kong dollars, target price $270, stop loss $230. I personally do not hold the aforementioned stock.